Hi, my dear buddies. How are you doing? My CMA final buddies. So very happy to announce that I through our my very good friend Tarun sir, Tarun's Brainery, we are launching the CMA final navigator December 25 and June 26 batch. So all these subjects will be handled, and I would be handling direct tax and international laws. Yes, we have a bunch of excellent faculty from Tarun's Veerabadran who would be handling all these things, my dear friends. So this I'll be just taking you through the basics in this particular session, and also explaining how we'll be doing the classes, what are the materials that we'll be giving, etc. An introduction, and then also after this, an introductory class will also be added to this, and you can see how we'll be taking these classes. So if you attend our sessions, which are online live sessions, we can assure you that you will pass the CMA final examinations with amazing marks. Okay, without further ado, my dear friends, let us begin. I'm happy that you chose me for your journey in CMA final direct taxes. I will ensure that you will not only just clear, but also do really well in CMA final, right? So on that note, my dear friends, let me take you through the material. So first and foremost, what will I show you? I'll show you the CMA material, which you have in your from your institute. Paper 15, direct tax laws and international taxation. So guys, what they have done now, the entire income tax CA and CMA syllabus is almost the same, but in CA they have organized it differently, in CMA they have organized it different. So we will be exclusively doing for CMA, but what I have done here is, I'll show you this. You see, we have direct tax laws in this section A, section B. Two sections are there, okay? So section A talks about direct tax laws, section B talks about international taxation. So international taxation, we have double tax avoidance agreements, transfer pricing, GAR, all those things. Whereas indirect tax laws, rather than saying income from house property, income from PGBP, income from capital gains, profit and gains of business, income from other sources, rather than that, what they have done is they have combined everything into this. Like first one, assessment of income and computation of tax liability of various entities. So here you have individual, Hindu and family, then you have company, you have trust, everything they have merged into this. And then we have certain grievance redressal mechanism and all those things. So what they have done is the entire syllabus they have devised in their own way into various things. So that first we have tax management, first we have the normal, what you say, assessment of income, computation of income. Then we have what? Tax management and return filing. So all your return of income, assessment, how it happens, what are the various types of assessment procedures, all that is there. Then your grievance result, how will you prefer an appeal, then penalties, then business restructuring, that is amalgamation, demerger, all those things. And of course your tax planning, then the officers, CBDT officers, e-commerce, then you have a special thing called Black Money Act. So we'll do everything, no doubt about it, but we'll do it in a different way. See, some topics we have to go fast because they are just very easy, but you will not realize. I know that I am going a little fast. Other places will go slow wherever it is slow. So you will have absolutely no problem. So the entire topic I have taken and I have devised two material, my dear friends. This is relevant for both CA and CMA, but we're exclusively doing for CMA now. The same assessment of other entities were there. No? So what I have done is I've divided into basics now. First, your introduction and tax rate, which is there in the first chapter. Then it says assessment of company. So what will company do? Company will get profit and gains of business and profession. So that is the next chapter. And then company also, what will they do? They will also do, get income from capital gains. Individual also will get income from capital gains. So that chapter I've done it. So rather than studying in a very haphazard manner, I have broken it into sub chapters, and this is what I've organized our notes. So if you study this and then see the CMM material, you will find it very easy. Don't worry about it. Okay. So this is the entire thing. So I will be giving you two materials, my dear friends. First material is called Tax Verse 1, which has the entire module, right? This is the direct tax module. So if you see in your thing, section A, direct tax laws, 60% weightage. So for the 60%, you have this book number 1 called Tax Verse 1. Okay. Next, you have module number 2. This is for international taxation. Now, what is international taxation here? International taxation is this: double tax avoidance, transfer pricing. For this, I have one more. Right? Apart from that, we will open our CMA material, CMA previous year's questions, and try solving almost all the questions that is possible. What type of questions will come, everything we'll be discussing, right? So the material is designed in such a way that it is very easy for you. Now, module number 1 will be in color. Module number 2 will be black and white, because in international taxation, you don't need to remember too many amendments. There aren't any. But here we will be learning all these things, right? So now this particular classes, my dear friends, is predominantly, let me be very clear, it is for your December 2025 attempt and your June 2026 attempt. But there may be something. So this for December 2025 attempt, we will be doing Finance Act 2024. But for June 2026, we have Finance Act 2025. You will be asking, sir, but don't you think so? Too many other things are there. No, hardly any few amendments. So first we'll do for December 25. Then I'll be releasing multiple amendment videos. To be honest, between 24 and 25, hardly any amendments are there. But amendment videos I will release, and I'll give you an additional material also, which is very easy. So because from 23 to 24, there were lot many changes. From 24 to 25, changes are not that much. Okay, so we can, those who are writing both in December and June, you can take up these classes. Let me clarify, absolutely no problem. But in a couple of months after these classes are going on, we will be starting from July, my dear friends, live classes, July, August, September, October, November, like that. So you finish off your December 25 examinations, and those who have taken up for June 26, I'll be releasing the next few months an addendum material, small material, few pages, and the amendment videos, in detail, in-depth amendment videos. So nothing to worry. That's the reason why we have devised like this. So go for it, my dear friends. You can close your eyes and go for these classes. So now I'll be taking you through the basics. Now, the basics are what you studied in CMA Inter. But in CMA Final, if you want to, transition, you need to know the basics. You would have forgotten. So what I'll do now, the next maybe 1 hour, would take you through the basics of little bit of CMA Inter and CMA Final mix, introduction, and tax rates. Tax rates are very, very, very important, and we'll only be doing Finance Act 24. Okay, so that it will help in a December 25 exam, and not many changes, to be very honest with you. In 25, you can manage that with amendment videos. I will be there every step of the way. Classes are going to be online live, and we'll be doing it through THARUN'S Brainery. Tarun sir has been a very good friend since many, many years now, and we're gonna rock. Okay, so just give me 1 more hour where I'll be taking you to the basics. Now, this basics, you may find it, what do you say? And am I going little fast? Because it is needed, because you already have studied this in CMA Inter. But still, I'm going to bridge it and ensure that you're going to study well. So, my dear friends, without further ado, let me bring you through CMA and CA, and it can be used for anything, the basics anyway. But this batch that we are doing is exclusively for CMA final, right? So as I told you, the entire material which is there in your CMA Institute material is divided into 2 modules, and you will be getting colored module 1 and black and white module 2, which will really help you clear this examination with these. So if you see my material, I'll just show you. There are a lot of charts here. Many things are there. You see, whenever important, words are there, I've made it in red. All the examples are in green. So there's a legend for it, right? And all the amendments are in purple. So it is done in a very, very scientific manner. See, for example, for Finance Act 24, these are the amendments. So that is in purple. So it is in a very friendly font, which will really help you. A lot of examples are there, a lot of charts are there. So rather than studying your CMA material, which seems to be a little boring, this is a very, very attractive material for you. A lot of charts I've given, my dear friends, and you'll really, really enjoy. So just give me 1 more hour. I'm putting a video immediately, embedding that video into this as well. I've already recorded that introduction that you will enjoy, right? You will enjoy the basics of taxation. You will also enjoy the income tax rates and all those things. Okay. Without further ado, let's dive into that particular video. I am looking forward to meeting you all on Tarun's Brainery's channel, whereby we'll be discussing and decoding the law together, income tax law, and we're going to have a lot of fun. Okay. Love you all, guys. Cheers. Come on, all of you, do a fist pump for me. And let's together clear the wonderful CMA examination together. Cheers. Let's begin, my friends. Okay, no time to waste. Let's begin right away. So guys, Income Tax Act, we have 23 chapters in numbers, but as far as the count, if you take the count, then you have 49 chapters. So entire act is divided into various chapters. There are 298 sections, that's all. But then actually it's not 298. There are almost 500 plus 600 sections are there because you have ATG, ATU, ATC like that. So basically, though the numbers are 298, the actual sections are a lot. Numbering is only 298, but then in each section there are millions of sections, right? That is the reason. Anyway, all this is not relevant, but I'm just giving you the overall structure. The regulatory body is called the Central Board of Direct Taxes, CBDT, and they frame the rules. They'll frame procedures, they'll frame notifications, they'll frame circulars and all those things. Okay, yes. Now, anyway, for our May 25, November 25 examination, all those things, whatever it is, guys. So, if I want to talk about the total income should be calculated as per the manner laid down in the Act. What do you mean by manner laid down in the Act? Very simple. There are 5 heads of income. So we have salary, we have house property, we have PGBP, we have capital gain, we have IFOS. If you study this, then the things are over. Apart from that, what do we have for our examination? We have assessment of other entities. You have business trust, you have AOP, you have BOI, you have partnership firm, all those things. Then we have TDS provisions, right? So all these things, everything is combined. Income tax is very, very easy. One person from Andhra, awesome. Udupi, Hubli, superb guys. Very nice. It's a bunch of different people. Excellent. Very good. So salary, house property, PGBP, capital gain, IFOS. Okay, all these sections are there. Then we have what? Clubbing. Then we have set off, carry forward. Then we have exemptions. Then we have deductions. All those things are there. Ultimately, total income, you will get to the total income. 66, 67, 68 are the sections with respect to total income. So our syllabus covers everything. It's a vast syllabus. It's very easy, but DT is very easy. People simply tell DT is difficult. They are all lying. It is one of the easiest subject ever. To be very honest with you, it's very, very simple, guys. There's nothing in DT which cannot be done and all that. There's absolutely nothing in that. Okay. Yes. So one second. Right. Now, one second, guys. This internet sometimes. Yeah, but if I'm not audible, etc., you should tell me so that we can discuss the other things. Okay. Right, guys. So, my dear friends, for our attempt, we have the Finance Act 2024, right? We have the Finance Act 2024. This Finance Act 2024 will be from 1st April 2024 to 31st March 2025. This is the year where I will file the, return of income for this year. This is called as the previous year. This is called as the previous year, you know. Which act is applicable for our May 25, November 25? Finance Act 2024. And from which year to which year, what is the period of this Finance Act 2024? 1st April 2024 to 31st March 2025. That is the 1 year. And after that, the income that you earn in this year, I repeat, the income that you earn in this year from 1/4/24 to 31st March 25, it will be assessed. It will be assessed in 2025, 2026. So basically, there are 2 things, as you know. One is called as the previous year. One more is called as the assessment year. Assessment year is what? 1/4/25 to 31/3/26. So my dear friends, Finance Act 24. What is the previous year? 24/25. What is the assessment year? 25/26. Very, very simple. So for our attempt, May 25, November 25. What is the assessment year? 25/26. What is the previous year? 24/25. I can hear you. Come on, you should all shout and tell me. What is the previous year? 24/25. What is the assessment year? 25/26. What is the Finance Act? Finance Act is 24. So assessment year will always be your attempt year. So 25 is your attempt year. No, attempt year will be your assessment year. Previous year will be the Finance Act. So 24/25 is the previous year. What is the Finance Act? Finance Act 24. Okay, everybody with me? Yes or no? I can hear all of you. You should start shouting. You should start talking. No problem. So my dear friends, as you all know, that is fine. That's fine. Right. So moving on. So whatever is important, I will pick and tell that only. Don't worry. Okay. So Income Tax Act we have rules by the Central Board of Direct Taxes. We have notification. Notification is nothing but an additional law. which is again given by the CBDT. You have circular. Circulars are guidance principles where CBDT, if they give any clarification to the officers, that is called as a circular. Now, circular just is like an instruction given by the CBDT to its officers, to the assessing officers. Okay, that's all it is. Then of course we have to study the Finance Act 2024 amendments. And this particular year, there have been quite a few amendments. There are changes in capital gain, huge changes in capital gain, which has changed the structure itself. There are changes in assessment procedure, search and seizure, all these have changed. So I cannot go fast in all this area. I need to go slow. That is the reason I told you anything extra also, if not 20 hours, if it's 30 hours, 35 hours also, I will give you. You have to make time somehow to study. My intention is not to finish off everything in 80, 70 hours, take money and go. That is, I'm not that kind of a person, right? So even though there are, these many students, I really want to take the class, and remaining part I will give you videos, because I really genuinely want you to clear. It's not that anybody is doing here for money. Even the organizers there, they're doing it wholeheartedly to ensure that you clear. Okay? Yes. Yes, good. Are you with me, my dear friends? Yes or no? You can just put thumbs up. Yes and all, no need to type. Thumbs up is enough. Don't worry. Okay, don't waste time. You're always chatting with me. I will ensure that this is like a live class. I will not let you leave only. You will never believe that it is, I am sitting somewhere, you are sitting somewhere. It is not like that. Okay? Yes. Come on, all of you. Thumbs up, thumbs up, thumbs up. Awesome, awesome. Brilliant. I'm constantly seeing. Yes. Okay, guys. So come here. No need to waste time sitting, yes, all, no, all those things. No, thumbs up is more than sufficient. Awesome, guys. You guys are brilliant. Superb. Super enthusiastic students. Right. Okay, guys. See, section number 4, tax on income. Section number 4, tax on income. And one more thing, my promise, whatever this we are doing, this also I will give you as a backup. That is my promise. Okay. Whatever we are doing now, this also I'll give you as a backup, so that you can pause this video, take a picture of the chart and all that. Okay, yes or no? Yes. Okay, don't worry about it. I am here with you. I will ensure that you will clear DT. DT will be the easiest subject ever. That is my promise. Okay, so you don't have to waste time sitting and, oh, what is this fellow writing? Let me write, let me listen. Just listen to my class. That's it. When I give you time to write something, that you write. Otherwise, just listen to my class. This backup also I'll give you. Okay, I'll either upload on YouTube or I'll give it to you separately. Apart from that 20 hours, this also I'll give you. So that particular class, you can go and take a picture or do whatever. All right, guys? Great. So do not waste time seeing, okay, I want to write down. Don't waste any. Just listen to my class. More than sufficient. And whenever I give you time, I'll give you time for certain things. That time you can write. Okay, come on, guys. Awesome. Section number 4, tax on income. Tax on income. You see, the tax rates are there. Total income is there. And it is on a person. So section number 4 says there will be tax on the total income of a person. So we need to understand who is a person. Person is defined in 2 clause 31. And we need to understand what do you mean by total income. Income is defined in 2 clause 24 as computed under section 5, it says. Very simple. And tax rate, my dear friends. Tax rate, 2 things are given. 1, as per the rates in force. As per the rates in force. One more is as per the rates as per the act. One is rates in force. One more is rate as per the act. Wherever you see the dialogue rate in force, that is different from whatever you see rate as per the act. I repeat, wherever you see rate in force, it is different from whatever you say rates as per the act. Rate in force means what? Rate will be given in the Finance Act. Nirmala Madam will give it in the Finance Act, saying that this is the rate for this, this is the rate for this. For example, section 194D, TDS section 194D says it will be as per the rates in force. Means every year in the Finance Act she can change the rates. I repeat, every year in the Finance Act she can change the rates. On the other hand, rates as per the Act means what? For example, 194J, that is our TDS on professional service, 194J, that she will give there only. Where will she give? 2% and 10%. She will give there only 2%, 10%. Where will she give it? She will give it in the Income Tax Act itself. So there are 2 things, my dear friends. One is rates given in the Act. One more is rates in force. Rates given in the Act and then rates in force. Are you with me? Everybody with me? Yes. So you should see in the wordings what they have given, 194D or 194J. 194D is Finance Act, 194J is what? 2%, 10% as the case may be. Very, very simple, guys. Now, that is all there is to it. Simple. Moving on. Moving on. Person. Quickly. Who is a person, guys? As you studied in CA Inter, person means an SSE. SSE is a person. Now, who is an SSE? All these people, guys. Individual. Individual. You and I, we are persons. Do we have to pay tax? Yes. Hindu undivided family. Two types of law is there. Mitakshara school of Hindu law, Dhayabhaga school of Hindu law. Mitakshara school of Hindu law is in rest of India, whereas Dhayabhaga is in West Bengal and Assam. Okay. So individual HF. Third one is what? Firm. Firm, that is LLP or partnership firm. Both are covered there. That is what it is. Then company. You have Indian company, foreign company, domestic company. Three types are there. But anyway, now Indian domestic can be linked for our understanding. We can take it as the same. Then we have what? AOP, BOI, Association of Person, Body of Individuals. As the name suggests, BOI means body of individuals. All individuals coming together is called body of individuals. Whereas association of persons can be an association of individuals also, or it could be an association of one individual and one company. Two companies coming together can be an association of person, like a joint venture. For example, Starbucks. Starbucks is a joint venture between Tata and Starbucks, US. When they're coming together, they could start a joint venture, a separate company, or it could be an association of person, right? Association of person is actually happens voluntarily, whereas body of individuals can happen without any logic. Body of individuals can need not be for a particular profit also. If you and I come together and start something just for charity, etc., that could be a body of individual. Whereas association of person generally have a profit motive. Generally have what, guys? Profit motive. Then we have what? Local authority. Local authority will be your municipality. In Bangalore, it is called Bruhat Bangalore Mahanagar Palike. That will be Bangalore. Also, you will have your own stuff, and in Andhra, you will have your own stuff, right? Kasargod, you will have your own stuff. All these things. Then you have artificial juridical person. So, is a temple? Temple also, is it a person? Will Nirmala Madam tax temple also 100%? Nirmala Madam will tax everything that moves. Okay. Yes, I'll be using Nirmala Madam a lot. Nirmala Madam is representative of the government. Okay, nothing against her, right? It is a representative of the government. Whenever I say Nirmala Madam, it will be what? It will be finance. Basically, I'm talking about the finance ministry. I'm talking about CBDT. I'm talking about the government as such. Okay, so artificial juridical person, temple and university is also covered. So this is the entire thing with respect to SSC. Everybody with me? Everybody with me? Yes or no? Did you understand? Any doubt you can ask me on the group. Do not hesitate. Okay. Do not hesitate, guys. Nobody is going to get personal here, tell why you are asking such stupid doubt. No doubt is stupid. Everything is valid. Okay, so you need to ask me. Everybody with me? Yes or no? Come on, you need to respond on the group. Everybody understood or not? What is a person? Who is a person? Come on, guys. I'm waiting for your response. Have you understood what is tax on total income? I'm waiting for your response, buddies. Okay, great. Super. Right. So this will be generally the entire format. You have income from salary, income from house property, income from business and profession, income from capital gains, income from other sources. Then you have something called as GTI, gross total income. Then your deductions and all those things will come. Deductions, etc. will come. Anyway. So basically you have all these heads and all you have to study. Anyway. So guys, very simple. Now there are two regimes. One is called as the old tax regime and one is called as the new tax regime. For individuals, new tax regime is given under 115 BAC. It's section 115 BAC. And couple of years ago, Nirmala Madam has told that the new tax regime is the default regime. The new tax regime is the default regime. No other regime you can use. So basically, if the question is silent, you need to blindly follow this default regime. If the question is silent, you have to follow the default regime. If question says, have you opted out of the default regime? If the question says the SSC has opted out of the default regime, then you should do as per the old regime. So it's always better to follow the new regime. It is a default tax regime, right? Yes. So as far as the rates are concerned, guys, whatever these rates which are there are already there in the notes. Come to the notes, I'll show you where it is.
so that you should not get confused. I've given you everything and I've given you the index, so that will be very easy for you to follow, my dear friends. All this we have seen now quickly. AOP, BOI, all that we saw. Right. This definition all you can go through, guys, no problem. As I told you, we have to compress everything and do all the important areas. That is what we are doing. Whatever is relevant for the examination, we have to do. It's like a quick revision. Those of you who have never touched, it's okay. You will be able to follow. Trust me. Don't worry about it. You may feel it is a little fast, but it's okay. You will be able to manage. You guys are awesome. You will be able to manage. The ones who have already studied, you know, it's just a revision thing for you. Okay? Yes. So I'm just going to make the expectations, set the expectation at the beginning itself, guys. As I told you, my batch will take almost 200 hours. So we do not have that kind of time to spend. So I will have to do it half now. We'll have to do it in around 100, 110 hours, of which 70, 80 hours I'll be taking. Remaining I'll be giving you videos so that you are comfortable. I don't want to rush everything. It is not possible to finish DT and IDT. I told the organizers also very clearly from day one, it is not possible to finish. I will not be able to finish. But I will, whatever we are doing, we'll do it in a thorough manner, and I will give you videos from my side. Do not worry about it. Okay? Yes. Because I want you to clear. That's the objective. Money is not the objective. My fee is not the objective. Your clearing is the objective. I want you to become chartered accountant. Yes. So average rate of tax and maximum marginal, all this we'll discuss quickly. One second. This page number A6. Everybody guys, page number A6. So whatever I'm going to write now or show you now is all given in page number A6. Okay. This is the old regime. Which regime? Old regime. Quickly we'll revise the rates. Old regime. In case of individual, HUF, AOP, BOI, artificial juridical person, resident or non-resident, whatever the case, all cases. So up to 2.5 lakh basic exemption limit, the tax rate is nil. 2.5 lakh to 5 lakh, tax rate is 5%. 5 lakh to 10 lakh, tax rate is 20%. And more than 10 lakh, tax rate is 30%. Resident senior citizen who's an individual, greater than or equal to 60 years. So guys, if you are a resident or non-resident, all cases is the thing. If you are a senior citizen means what? Individual more than or equal to 60 years. If you are a senior citizen, total income up to 3 lakh, nil. 3 lakh to 5 lakh, 5%. 5 lakh to 10 lakh, 20%. And more than 10 lakh, how much it is? It is 30%. More than 10 lakh, it is 30%. That is point number B. Point number C, resident individual, super senior citizen. Super senior citizen means what? Greater than or equal to 80 years. This is only in the old regime. Here up to 5 lakh, it is nil. 5 lakh to 10 lakh, 20%. And greater than 10 lakh, it is 30%. Very simple. So this, you may remember, may not remember, because what is really relevant now is the new regime. It is the new regime. New regime. New regime 115 BAC. In the notes, if you see, my dear friends, it is given here. Check this out. Page number A7. Page number A7, this point. Page number A7, this point. There you go. Everybody got it? Everybody got it? This is the rates for assessment year 25-26, Finance Act 24-25. Important. Why important? Nirmala madam has changed it a little. She has changed it a little. What this part was there before, and this is there now. So this will come for our exam May 25, November 25. Even it is relevant for CMA also. CA, CMA, both it will ask. Everybody got it, yes or no? Thumbs up, thumbs up, yes. So up to 3 lakh, nil. And guys, very simple. This one, no, it is the same rate for resident or non-resident, same rate for senior citizen, same rate for super senior citizen, everything. Right? It is same rate for resident or non-resident, same rate for senior citizen, same rate for super senior citizen. There is no other difference. There is no difference only. Okay. Whereas for the old regime, there was different basic exemption limit. But here, if you are a resident, senior citizen means what? Tata. Super senior citizen means super tata. So for normal fellow, you and me, tata fellow and super tata fellow, it is the same, entire, what do you say? The slabs. Okay, same slabs. Now the slabs here are slightly different. Up to 3 lakh, nil. 3 lakh to 7 lakh, 5%. 7 lakh to 10 lakh, 10%. 10 lakh to 12 lakh, 15%. 12 lakh to 15 lakh, 20%. And above 15 lakh, 30%. So here 555% she's increased, except the last part where 10% is the increase, and here 3 lakh 3 lakh is the increase, and again only in this thing there is a 2 lakh increase, then again 3 lakh and above 15. So in the Finance Act 2025, which came in February recently, now only this when it came, she has what do you say, changed it again, which means the last time ever this thing can come, is in May 25, November 25. Because again, guys, the new income tax bill has been promulgated, as you know. So there again, some things and all will be different. So you just study this and go. We will not study what has come now. We will not study what was there before. We will study exactly what is required for the examination. But if certain things have changed, I will just let you know that this thing has changed, so that you will remember that, okay, this is very important for the exam, because institute always gives those things which are about to change. Okay. Yes. So this is regarding what, guys? The rates for assessment year 25-26. So up to 3 lakh, nil. 3 lakh to 7 lakh, how much? 5%. Come on, all of you keep telling. I can hear from here. From Mangaluru, Udupi, and Mangalore and all, Andhra Pradesh, from Kasargod, I should be able to hear. From Bangalore, everywhere. Up to 3 lakh, nil. From Andhra Pradesh also. From 3 lakh to 7 lakh, 5%. 7 lakh to 10 lakh, 10%. 10 to 12 lakh, 15%. 12 lakh to 15, 20%. And above 50 lakh, how much? 30%. So all this put together is what we need to see. Very, very simple. Got it? So in the new regime, there are certain things that you will not get. So that we will see along the way. No problem. So guys, example, quickly see. Old regime and new regime example. If your total income 24 lakh is what you're earning in the old regime, up to 2.5 lakh, nil. 2.5 to 5 lakh, 5%, 12,500. 5 lakh to 10 lakh, 1 lakh. And 10 lakh, above 10 lakh, it's 30%. Above 10 lakh means for 14 lakh rupees, you will pay 30%. That is 24 lakh minus 10 lakh, 30%, 4 lakh 20. Overall, how much will it be? 5 lakh 32,500. But if it is the new regime, this is what you will be earning. You see, up to 3 lakh, nil. 3 lakh to 7 lakh, that is 4 lakh into 5%, 20,000. 7 lakh to 10 lakh, for 3 lakh it is 10%, 30,000. 10 lakh to 12 lakh, again same thing, 12 lakh to 15 lakh, 60,000. So guys, you need to understand the shortcut. The shortcut is what? If they ask you anything above, 10 lakh in the old regime, you know this, 1 lakh 12,500 is the tax you anyway have to pay till 10 lakh. So whatever you do, if they give you 40 lakhs, assume you should do 40 minus 10. For that 30 lakh, it is what? 30%. Plus you can just do 1 lakh 12,500. Very simple. On the other hand, if they ask you in the new regime, up to 15 lakh, you can count. Up to 15 lakh, how much? 60 plus 30, 90. 90 plus 30, 1 lakh 20. 1 lakh 20 plus 20, 1 lakh 40. So you can say up to 15 lakh rupees, I will pay a tax of 1 lakh 40,000 rupees. So if they ask in the exam 20 lakh, 20 lakh minus 15 lakh, that is for the 5 lakh. What's the percentage? 30%. So for 5 lakh, 30% will be 1 lakh 50,000 rupees. Plus what? 1 lakh 40. Always remember, in the old regime, till 10 lakh, how much tax are you paying? 1 lakh 12,500. In the new regime, up to 15 lakh, how much tax you are paying? 1 lakh 40,000. Very, very simple. So in MCQ and all those things, you can immediately say 1 lakh 40,000 plus the difference between 15 and whatever amount into 30%. Into 30%. Are you with me, guys? So this is what? 5 lakh 32,500. This is 4 lakh 10,000. So guys, if the SSC in the above example is not 35-year-old, is a 85-year-old, then tax under the new regime, there is absolutely no change. And tax under the old regime, there will be a change. Instead of 5 lakh 32,500, it will be 5 lakh 20,000. It will be 5 lakh 20,000. Right? Very simple. Everybody with me on this? Right? I'll just put it up for like 10 seconds so that you can see. Make it full screen. You can check the difference here quickly. Just go through. You can take a picture if you want, no problem. Anyway, I will give you the backup of this video so that there also you can take. I'm just saying. And if it is 85-year-old, what will happen? This will happen. Everybody with me, guys? Thumbs up, thumbs up, thumbs up. I will not let you sit idle. You will always be messaging me. I should know whether you're awake or not. Yes or no? Good. Awesome, guys. You guys are superb. People from Mangaluru, Udupi and the coastal belt generally have observed that they're very silent when you meet them. They are very, very like nice people in the sense, very, very silent. They'll not speak only. Correct? You'll be like, what, this person is very silent, is like probably an introvert, etc. But actually, when you get to know them, they will never stop speaking. Correct? First they'll not talk only, then they'll never stop. Right? Yes, that is what my observation is for all the people from the coastal belt. It's awesome. Initially they are very shy, but once you get to know them, that's it. Initially silent, later violent. Yes or no? Yes. You also know I'm telling the truth. Yes, guys. So one doubt also, they'll ask in the, generally for your knowledge. See, in previous year 24-25, assessment year 25-26. So guys, 1/4/24 to 31st March 25, right? Now, if you are born on 1st April 1965, if you are born on 1st April 1965, your 60th year birthday will be on 1/4/2025. Correct? Because in the year 24 you have a leap year. So basically on 31st March 25, I repeat, if you are born on 1/4/1965, right, on 31st March 2025, you will be what? 59 years and 365 days. Why 365 days? Because 2024 is a leap year. 2024 is a leap year, right? So it will be 366 days. It is not 365 days, 366 days. So in the previous year, 2024-25, 24 is a leap year. So my doubt to you is, if you're born on 1st April 1965, on 1st April 2025, you would have completed 60 years. Okay, but my question is, in the previous year 24-25, can you take the benefit of that 60 years basic income limit of 3 lakh or no? Let's assume you're in the old regime. Your birthday falls on the first day of the assessment year. Your birthday doesn't fall on the last day of the previous year. Are you understanding? Your birthday falls on the first day of the assessment year. It will not fall on the last day of your previous year. On the last day of the previous year are only 59 years and 365 days. So the question here is, will you get the benefit of 3 lakh rupees even though you did not complete 60 years as on 31st March 25? This issue went to Supreme Court. And Supreme Court said, let us give the benefit. Now, Supreme Court said, even though your birthday is on 1st April 2025, I will assume that your birthday is on 31st March 2025. Imagine. Right? Even though if your birthday is on 1st April 25, I will assume that your birthday is on 31st March 25 and you have completed 60 years on 31st March 25. Thereby giving you eligibility for a higher basic exemption limit. Everybody with me on this? Yes or no? Kindly read this decision here. A7. A7, guys. Read. A7. Check out. Right? Right. A7. Understood? So when will you assume? So if you are born on 1st April 1965, what will you take? If you are born on 1st April 1965, what will you take? You will take 60 years as on 31st March 2025. Then if you are born on 1st April 1945, 80 years you will take on 31st March 25. That's about it. That same thing. Only for old regime. I'll make it full screen. If you want, you can take a picture or just go through some hidden points. That's all. Awesome. Moving on, guys. Moving on. Now, there is also something called as surcharge. That also we need to remember. Surcharge. Surcharge is what? Extra tax for the ultra rich people. Ultra rich people will be there. Extra tax you have to pay. Correct? Extra tax for ultra rich. No slab rate. Mangalore Udupi side, super ultra rich fellows will be there. They will come in white dhoti and white, shirt. They will come. You will not even know that they are so rich, but they'll have crores of rupees. They will pay something called what? Surcharge. Right? Surcharge is the extra tax for the ultra rich. There is no, what do you say, slab rate and all those things. Very simple. It is 10% of tax. If the total income is more, this is for who all? Individual, HF, AOP, BOI, artificial juridical person. 10% of tax, if the total income is more than 50 lakh up to 1 crore. You need to unfortunately remember these rates because they will give you a sum and then you need to link it and write, because they will not give surcharge has to be charged. You need to remember that surcharge has to be charged. So 10, if the total income is more than 50 lakh up to 1 crore, how much is it? 10% of tax. If the total income is more than 1 CR up to 2 CR, 15% of tax. The total income is more than 2 CR up to 5 CR, 25% of tax. If the total income is more than 5 CR, 37% of tax. It's a tax on tax. That's why it's called surcharge. And interestingly, guys, if your income is more than 5 CR, if your income is more than 5 CR, it is not 37% for the new regime. It is 25% in the new regime. Everything is there in the notes here. Don't worry. Surcharge is given here separately. Don't worry. Here, this is all surcharge. Page number A9. Page number A9, my dear friend. Surcharge is given. Right? Yes. So 10% of tax, 15% of tax, 25% of tax, 37% of tax. And here in the finally thing, it is 25% in the new or default regime. The new or default regime. This is for regular income only. This is for regular income only. This is for what? Regular income. Correct? So you see in this chart now, any other income, any other income. Dividend income, I'll come to it. Don't worry. Dividend income, I'll come to it. So this is the scene. Okay. Understood, guys? All of you? So if the total income is 50 to 1 crore, 10%. 1 crore to 2 crore, 15%. 2 crore to 5 crore, 25%. More than 5 crore, 37%. But the 37% is converted to 25% if you are going in the default regime, new regime or default regime. Apart from that, health and education cess is 4% on tax, that is including surcharge. First you have to compute tax, then surcharge, then 4% on that. Now, rounding off. Rounding off always should be to the nearest 10. Rounding off always should be, rounding off of total income also, rounding off of tax also, it should always be near the nearest 10. So if your income is, let's say, 27 lakh 37,498, nearest 10 will be 500. If it is 492, nearest 10 will be 9490 rupees. Got it? That's how it you have to look at it. Now, guys, there is surcharge on special income also. For dividend, capital gain on shares, capital gain on property. These are covered under 111A, 112 and 112A. So till the year 2018, there was no tax on long-term capital gain from shares. Arun Jaitley ji said, from today, there will be tax on long-term capital gain on shares. So then when I am bringing the share into taxation mode, there will be huge gains. Similarly, in 2017 also, there was no tax for dividend. Company had to pay something called as dividend distribution tax, DDT. And then corporate dividend tax basically. And then for the shareholder, it was exempt. But in the year 2017, Arun Jaitley ji said, no, dividend will now be taxed in the hands of the shareholders. So Suddenly, there's a huge influx of taxable income. Till today, I was getting 20 lakhs a dividend, no tax. But suddenly, from next year, 20 lakhs are added to my kitty, and I have to pay tax. And because of which, my income is increasing further, which will entail a higher surcharge. So, to give relief to this thing, to give relief to shareholders, to give relief to SSEs from dividend taxation and from capital gain taxation, the government decided to put a cap on the surcharge, maximum cap on the surcharge. What is the maximum cap on the surcharge? Specified income, that is 111A, 112, 112A, and dividend income. However much you earn, maximum 15% is the cap. However much you earn, maximum 15% is the cap. Beyond that, not possible. Okay. So if you see this now, you'll understand. Check it out. Page number A9, my dear friends. You see, any other income you have already seen. 10%, 15, 25, 37. This 37 will be 25% for the new regime we have seen. But you see here, other income, specified income. Dividend income, income under 111A, 112, 112A. Up to 50 lakhs, it is nil. And up to above 50 lakh and up to 1 crore, it is 10%. But guys, maximum you can go is only 15%. So, these 2 points especially, above 2 crore and up to 5 crore, above 5 crore, it is not 25% and 37%. It is only what? 15%. It is only stopped at what percentage? 15%. Everybody with me understood? It is always stopped at what? 15%. Why? I told you the logic. Everybody with me? Thumbs up, come on. Understood? So in which one? Only for 111A, 112, 112A, and what? Dividend income. Because all these earlier were taxable in the hands of, companies like dividend, etc. And there was no tax on long-term capital gain on shares, etc. Suddenly they brought into tax. When they brought into tax, I did not want to burden them with additional surcharge. So the surcharge maximum is only 15%. So whenever I'm computing the tax, I should now go with surcharge separately. With other incomes separately and this income separately. And for other income, it is only 15%. Now, this chart is important. We'll explain, then we can solve the problem, right? You see, first one, total income will include specified income also. Total income will include specified income. And it does not exceed 50 lakh. So surcharge on tax computed under 111A and 112A and dividend income, here it is nil, because it's not exceeding 50 lakh. Second one, total income, all including specified income also, including specified income, exceeds 50 lakh but does not exceed 1 crore. Exceed 50 lakh but does not exceed 1 crore. So guys, all including, it is not exceeding 50 lakh but it is not exceeding 1 crore. So in both the cases, it is 10%. Total income including specified income exceeds 1 crore but does not exceed 2 crore. That is here. Exceeds 1 crore but does not exceed 2 crore. Both the cases, it is 15%. Now, this is interesting. Total income excluding specified income exceeds 2 crore but does not exceed 5 crore. That is, other income is exceeding 2 crore but does not exceed 5 crore. So guys, for other income portion, what is the surcharge? 25%. And only for the specified income, however it might be, it is 15%. As the total income, all excluding specified income, is exceeding 5 crore. Total income is above 5 crore and total income excludes this income. So I will have to charge what? 37% in the old regime, 25% in the new regime. But for the specified income, it should only be maximum 15%. It should always be maximum 15%. Now there is no provision here where All inclusive it is more. See, it is including here, including. Suddenly it becomes excluding. So they went and asked one more thing. Sir, what if all income put together, it is 2 crore? I mean, all income put together is more than 2 crore. Because here you have used excluding. Sir, what if specified income, non-specified income, everything put together is more than 2 CR? That is not covered in situation 1, 2, 3, 4, 5, guys. So the lawmaker said, in that case, rate of surcharge shall not exceed 15%. Where the total income, including specified income, exceeds 2 crore, not covered in situation 4 and 5, rate of surcharge on the amount of income tax shall not exceed 15%. Maximum how much, guys? 15%. So if you just do like this, you will not understand. See the sum here. Please cover up the last 2 columns with your hand or your book, guys. You need to do it on your own. Please cover the last 2 columns because I want you to solve this. First one I will solve for you. Remaining 2, 3, 4, 5, 6, immediately 2 minutes you have to take and solve. First I will solve for you. From 7 lakh, 6 lakh. Total how much? 13 lakh. Other income 65 lakh. Total income 78 lakh. All put together it is what? Less than 1 crore. Correct? So where will it come under here if you see? All including more than 50 lakh, less than 1 crore. So situation number 2 in both the cases. For capital gain income 6 plus 7, 10%. For other income 10%. Second also I will solve. Krish, all inclusive it is 1 crore 94 lakh 25,000. So all including it doesn't exceed 2 crore. So for both the cases 15%, 15%. 15%, 15%. Are you with me? Did you understand this? Yes or no? All of you guys, thumbs up. Thumbs up or thumbs down, your wish. Understood or not? Yes or no, guys? Solve 3, 4, 5, 6. Solve 3, 4, 5, 6 on your own right now. It's on the screen 3, 4, 5, 6. Before that, did you understand? Yes or no? Thumbs up or thumbs down, whatever it is, your wish. Solve 3, 4, 5, 6. Take 2, 3 minutes, solve it. Guys, respond. I'm not able to hear you. Come on. Okay, guys. See, third one. Okay. Money, 10th one is thumbs down, other things thumbs up. No problem. 10th one also will be thumbs up now. Check it out. Third. Mr. X. 111A, 112A, both put together 7,75,000 and this 3.15 CR. All put together 322.75, which will come under which situation? Everything including is actually more than 2 crore. This will come under special situation. If everything including exceeds 2 crore, if everything including exceeds 2 crore, then what is the rate? 15%. So it is 15, 15 on both. Sorry, 1 second. My bad. Sorry. So here, no, you exclude this. If excluding this, it is more than 2 crore, but less than 5 crore. Sorry, guys. My bad. It comes under situation 4. Total income excluding specified income exceeds 2 crore, but does not exceed 5 crore. Comes under situation number 4. So then 15 and 25. Next, you see. Simple. This is very simple. Everything excluding, you exclude this, it's okay. But anything excluding, it comes under more than 5 CR anyway. Total income excluding specified income exceeds 5 crore. Situation 5. This will come under 15%. This is 37%. 37% in the old regime, 25% in the new regime. You can write down 25% in the new regime. And this one, 15. Whatever amount you earn from specified income will not go beyond 15% surcharge. Right? Vishnu. See guys, all put together more than 2 CR. This will be under special situation here. What is the answer? 15%. Next, capital gain, other income. Total is 7.27 CR. Capital gain 6.42 crore. And other income 85 lakhs. So all put together is how much? 7.27 crore. All put together more than, you first see excluding. Excluding it is how much? It is how much? 85 lakhs. But I will not take that. I should take all including. All including it's more than 2 crore. So it is 15%, 15%. Very simple. Next 7. Joes. All put together is just more than 50 lakh, less than 1 crore. So 10%, 10%. Shan. All put together, it is more than 1 crore, 50 lakh, less than 2 crore. This one. More than 1 crore, does not exceed 2 crore. Situation number 3. More than 1 crore, does not exceed 2 crore. So what is it? 15%, 15%. Lalit. All put together, it is less than 50 lakh rupees. All put together, less than 50 lakh rupees. So, nil. Asif, you see, Asif. Asif. If you exclude this, you are just earning 4 lakhs, so nothing. You will not get anything. But if you include everything, 7.26 crore. Include everything, 7.26 crore. So you see, will it come under this situation? Everything including exceeding 50, does not exceed 50 lakh? No. Does it come under here? All inclusive, 50 lakh to 1 crore? No, it is 7 crore. Next, will it come under 3? All inclusive, 1 crore to 2 crore? No. Will it come under 4? Everything excluding 2 crore to 5 crore? No. If you exclude that specified income, actually some peanut amount it is, 4 lakh rupees. So it will not come under any of the 5 situations. Where will it come? Special situation. Total income, including specified income, exceeds 2 CR. Not covered in situation 4 and 5. Rate of surcharge for everything will be how much? 15%. Yes, Money, did you understand? In your WhatsApp it says Money. I think your name is Money only. Did you understand, buddy? 10th one also? Thumbs up. Everybody else understood or not? This is the concept of surcharge. This is the concept of surcharge. Everybody with me on this? Simple. Good. So, rounding off all that we have discussed. Great. Next, guys. Tax rates for companies. Tax rate for company. Come to page 812. So guys, below here, just make the change here. This should be 22, 23. Sorry, typo. 22, 23 it should be. And foreign company rate has been reduced now 35%. A13. Anyway, I'll give this here. Domestic company incorporated in India. There are 4 different things to it. Foreign company outside India, it was 40%, it is reduced now to 35%. Domestic company incorporated in India has 4 separate tax rates. One, 30% flat rate normally. One more, if the gross receipts or turnover in the previous year 22-23, if the gross receipts or turnover in the previous year 22-23 is less than or equal to 400 crore, is less than or equal to 400 crore, then 25% is the amount. 25% is the tax rate. It should also always be seen wet 2 years before the previous year. My previous year is 24-25. 1 year before that is 23-24. 1 year before that is 22-23. So always, that's why it's not 21-22. Answer is 22-23. Only in that year, the gross receipts or turnover in the previous year 22-23 alone is less than or equal to 400 crore, then 25%. Domestic companies 115 BAA, 22% it is subject to conditions, and new manufacturing companies 115 BAB. If you follow certain conditions, tax rate will be as low as 15%. Deadly. There is no slab rate, direct rate. Very simple. Got it? These are all the things. Domestic company, foreign company, all those areas. Apart from that, surcharge. Surcharge. That is also given in the notes. Surcharge. Total income. Domestic company, foreign company. If the surcharge is more than 1 year, the total income is more than 1 crore up to 10 crore, surcharge for domestic company is 7%, foreign company is 2%. The surcharge is more than 10 crore. The total income is more than 10 crore, and the surcharge for domestic company is 12%, foreign company 5%. If you see here, domestic company surcharge is higher because their tax rate is less. Foreign company surcharge is little low because tax rate is more. What's the tax rate? 35%. That is the reason. Right? So surcharge depends on the total income. Up to 1 crore, no surcharge. 1 crore to 10 crore, 7%. Foreign company 2%. More than 10 crore, domestic company 12%. Foreign company 5%. Tax rate for firm, LLP, local authority, etc. Tax rate 30%, surcharge 12%, cess at 4%. If total income is more than 1 crore, here surcharge will be 12%, on flat 12% surcharge it is. Tax rate is always 30%, cess will be 4%. Always after adding tax and surcharge, you will add cess of 4%. Got it? Then quickly, concept of marginal relief, predominantly in the old regime it will come. Let's take old regime example. It will come in the new regime also, but let me take the old regime example just to give you an example. Okay. So if my income is 50 lakh, total income is 50 lakh. Under the old regime, how much I'll have to pay, guys? 40 lakh into 30% plus I already told you shortcut 1,12,500. So how much it is overall? 13,12,500. So Mr. Ranyan pays a tax of 13,12,500. Under which regime? Old regime. If my income is increased by 1,000 rupees, if my income is now 50 lakh 1,000, earlier total income was 50 lakh, now income is what? 50 lakh 1,000. The income is 50 lakh 1,000, total income, what will be the old regime taxation? 40 lakh 1,000 into 30%, that is 12 lakh 300 plus 1 lakh 12,500, that is 13 lakh 12,800. Plus what? Plus surcharge of 10%. Why surcharge? If you go beyond 50 lakh, you have to give a surcharge of 10%. So you'll give a surcharge of what? 10%. 1 lakh 31,280. Right? So old regime 13 lakh 12,500, and here old regime with surcharge 14 lakh 44,080. So guys, think about it. Deadly. You're just earning 1000 rupees more and you're paying tax of almost 1 lakh more. Are you understanding? Because of the concept of surcharge. You're just paying, earning 1000 rupees more, but you're paying tax of what? 1 lakh more. So I will go to Nirmala madam and say, Madam, thank you so much for an amazing, what do you say, calculation where 1000 rupees more I'm earning and I'm paying 1 lakh rupees more tax. Awesome. So I'll propose one thing to you, Nirmala madam. Let me pay tax on 50 lakh only. Let me pay tax on 50 lakh only. Madam, I will pay 13 lakh 12,500. I'll pay, madam, to you. Please. And madam, extra amount that I'm earning 1000, you only keep, madam. I don't want. You only keep. I earned for you only. Happy Valentine's Day. Please take it. Right? Instead of adding this 1000 to my income and paying 14 lakh 4480 rupees, I will pay 13 lakh 12,500. This 1000 I earned for you only. Correct? I will keep it near your padam. Please take. I don't want. Correct? 13 lakh 13,500 you take, madam. Please enjoy. Anything above 50 lakh I earned for you only. That dialogue. This is called marginal relief. So what is marginal relief? Yes. Nirmala madam said okay. So what is the relief you are getting? Instead of paying 14 lakh 4480 rupees, you are only paying 13 lakh 13,500 rupees. The difference is the marginal relief. So see the marginal relief, 13 lakh 12,500 plus 1,000 extra you only pay. Take, you only take. 13 lakh 13,500. What is the marginal relief? 14 lakh 44,080. Whatever you are supposed to pay minus whatever you are paying, 13 lakh 13,800. The relaxation is called as marginal relief. 1 lakh 30,580 rupees is the relaxation. So what is this one? This is the tax on where the surcharge limit shifts. What is that? 50 lakh. What is 1000 rupees? It is the total income minus 50 lakh. And then 13 lakh 13,500 is the ultimate amount that I will be paying. Whatever I am supposed to pay, 14 lakh 4480 minus whatever I will pay will be the marginal relief. Everybody with me on this, yes or no? Yes or no, my dear friends? I'll put this up full screen. Check it out. Thumbs up, everybody. I am breaking down the entire thing so that it's easy for you. There you go. It's there right in front of you. You can take a picture if you want. So you are earning extra for auntie, Nirmala madam. Extra 1000 rupees you are earning and giving it to her. She can use it. Great. All the basic concepts we are doing it in the first session. Then slowly we'll start off with PGBP, we'll go to capital gains, all deadly areas, guys. Things have changed a lot, especially in capital gains. Now, one more interesting point called rebate. One more interesting point called rebate. Rebate is like an instant discount. Instant discount. This also has changed in the Finance Act 25. I'm not going to tell what the change is. It has changed in Finance Act 25. And especially in the new tax bill 25, which will obviously be the future. Old law will go, new law will come. So last time ever, all these rebate concepts can be asked would be the next 1 or 2 attempts. That's it. Until the new tax bill comes, it may be 3 attempts, 4 attempts, whatever. The last few times only they will ask. After that, it's gone. Right. So guys, there's a concept of rebate. In the old regime, you can still opt for the old regime. If your income for rebate should be maximum 5 lakh rupees, means if you are earning up to 5 lakh, there is no tax. How much? Tax or 12,500 rupees, whichever is less, will be like an instant discount, like a coupon code. Instant discount they will give. Income for rebate 5 lakh rupees. Rebate is how much? Tax or 12,500, whichever is less. In the new regime though, this is from Finance Act 23. The limit has been increased to how much, guys? 7 lakh rupees. Limit has been increased to 7 lakh rupees. So the rebate will be tax or 25,000 rupees, whichever is less. Tax or 25,000 rupees, whichever is less. So in the new regime, it is tax or 25,000, whichever is less. So up to 7 lakh rupee, you do not have to pay any income tax. Because what is the tax on 7 lakh? If you compute, it comes to 25,000 rupees only. So up to 25,000 rupees, there is rebate. So let's take an example. One more thing, guys. If you earn 1 rupee more than 5 lakh in the old regime, I repeat, if you earn 1 rupee more than 5 lakh in the old regime, you will not get the rebate. I will demonstrate here. Old regime, 2 examples I'll take. Let me make it full screen so that you can see properly. Instead of my face, you can see the screen. What is there in my face to see? Yes or no? Right. So you see, old regime, 4 lakh. Old regime, 4 lakh. Tax liability up to 2.5 lakh, nil. 2.5 lakh to 4 lakh, it is 7,500. For 1.5 lakh, I'll pay 5%. Rebate, it is how much? 7,500 or 12,500, whichever is less. 7,500 net tax liability. On the other hand, if my income is 5 lakh 5,000 rupees, up to 2.5 lakh, nil. 2.5 lakh to 5 lakh, 12,500. And 5,000 extra. For 5,000 extra, I am paying 20%, 1,000. Total is what? 13,500. Less rebate under section 87A. You will not get the rebate if your income crosses 5 lakh. Even if 1 rupee, if it crosses, you won't get it. Tax 13,500, cess 540, total amount is 14,040. No rebate. Old regime, no rebate. Yes or no? Take a picture. So under the old regime, there is no rebate for total income more than 5 lakh. Everybody with me? Thumbs up, thumbs up. Interesting point. In the new regime, calculation up to 6 lakh, tax on total income up to 3 lakh, nil. 3 lakh to 6 lakh at 5%, 15,000. Rebate will be what? Tax or 25,000, whichever is less. 15,000, nil. But if the income crosses 7 lakh, let's say 7 lakh 10,000 or 7 lakh 20,000, you see tax on total income for 7 lakh 10,000 will be 21,000. Tax on 7 lakh 20,000 rupees will be 22,000. Because up to 3 lakh it is nil, 3 lakh to 7 lakh is at 5%, and more than 7 lakh it is at 10%. So here it is how much? 21,000, 22,000. So 7 lakh 10,000, for 7 lakh 10,000 also you will get, 7 lakh 20,000 also you will get, 21,000, 22,000. In new regime, rebate is allowed, even if total income is more than 7 lakh. But rebate is restricted, guys. Rebate is restricted. So guys, if the income is more than 7 lakh in the new regime, rebate is allowed, but it is restricted. So Restricted to what? 3 steps. Total income minus 7 lakhs. Second one, compute the income payable on total income. So first you compute the total income minus 7 lakhs. Next compute what? Income tax payable on total income. If 2 is greater than 1, then rebate is 2 minus 1. If rebate is greater than 1, then rebate is 2 minus. Very simple logic, I'll tell you guys. But it's 7 lakh 10,000, no. 7 lakh 10,000 minus 7 lakh is how much? 10,000 rupees. What is the income tax payable on 7.1 lakh? 21,000 rupees. What is the rebate? 11,000 rupees. Logic is what? Very simple. For 7 lakh, I don't pay any tax. But for 7.1 lakh, I pay a tax of 21,000. Right? So it's like telling. For 7 lakh, generally, what is the tax actually? What is the extra payment? Over and above 7 lakh. 7.1 lakh, 10,000. 10k is extra. So I am telling Nirmala madam, up to 7 lakh anyway there is no tax. But above 7 lakh there is 10,000 extra. But for earning that 10,000 extra, I am paying tax of 21,000. So you are telling Nirmala madam, I will not pay 21,000 madam. I will only pay that extra 10,000 you only keep. It's like marginal relief. I earned for you only. You only keep that 10,000. I don't want. Please give me relief of 21 minus 11, 11,000. Same concept, see. So what is the first part? 7 lakh 10,000 minus 7 lakh 10,000. Income tax payable on 7.1 lakhs 21,000. 21,000 minus 10,000. 11,000 is the marginal relief. You pay tax how much? 10,000. You pay tax 10,000. Relief 11,000. So 21,000 is tax payable minus 11,000. So what is the tax payable? 10,000 only. It's like telling up to 7 lakh no tax. 10,000 you pay. Did you understand, guys? All of you did understand the logic? No mugging up. Did you understand the logic, guys? No mugging up, please. It is like marginal relief. Rebate under new regime is like marginal relief. Thumbs up if you understood. So that is all. There is same thing is given here, guys. Yes. So income definition is given here. That's fine. So this completes chapter number 1, which is just the basics. Very, very important chapter which will help us understand everything. Okay, hope you understood.